Good morning, Jan. First off, just love to get your take on the jobs report. What, if anything, stood out to you?
It was a strong report, clearly, both in terms of payroll employment and the decline in the unemployment rate by 0.2 increase in labor force participation. So I think quite a strong statement that we're making continued rapid progress on employment. At the same time, the average hourly earnings number much lower than expected, although much of that was probably in noisier categories. If you just focused on production and non-supervisory workers, it was a moderate increase. But, at the margin, I'd say it reduces slightly the concerns about labor market overheating.
Yeah, but you're not taking a lot away from it, I guess, is what I hear you saying in terms of what you referenced as noise.
No, we have a lot of different indicators on wage growth and labor market slack and labor market tightness. And most of them are still saying this is a very tight labor market with wage growth rates that are beyond what's ultimately sustainable. So I think this is still very consistent with the Fed starting to normalize monetary policy with a 25 basis point hike in a couple of weeks, as Chair Powell said this week.
I think your estimate of where we'd end up on the unemployment rate ended up being correct at 3.8%. I mean, how much lower can we go, Jan?
Well, I think we can go significantly lower, but the question, so I don't think there's like a physical constraint that would keep us from going down to the low twos, to the low threes. But I think it will mean further acceleration probably in wage growth, or at least continued wage growth above levels that are ultimately consistent with 2% inflation. So we do expect the unemployment rate to come down further, not as rapidly, but to the 3.5% range by the end of this year and probably below subsequently.